Hi and welcome to this guide to self-employed persons taxation. There are 11 topics covered in this guide, and after this session, you will gain a better understanding of your tax obligations as a self-employed person. Firstly, who is a self-employed person? A self-employed person is someone who carries on a trade, business, profession or vocation. He can be operating as a sole proprietor of a sole proprietorship business, or a partner of a partnership business. The person can also be exercising a profession or vocation and still be considered as a self-employed person. Here are some of the examples of persons exercising a profession or vocation. A person exercising a profession includes doctor, lawyer, accountant or architect. As for a person exercising a vocation, he can be a commission agent, freelancer, babysitter or tuition teacher. Next, we will be going through the features of a self-employed person versus an employee. This will help you differentiate between a self-employed person and an employee. You are self-employed when you perform work for others. For example, providing a service under a contract for service. On the other hand, you are an employee if you perform work under a contract of service. Here are some of the features of a self-employed person versus an employee. As a self-employed person, you work for yourself and you are in the position to realize a business profit or loss. As an employee, you work for an employer, and take instructions from your employer as to how your work should be carried out. As a self-employed person, you are responsible for the costs of repair, insurance and maintenance to the tools, equipment and machinery used in your work. You may make significant investments in buying the tools and equipment required to do the work, and you are able to retain a right over the use of the assets. As an employee, the tools and equipment will be supplied by your employer so that you can do your job. Your employer is also responsible for the repair, maintenance and insurance costs. And your employer retains the right of use over the tools and equipment provided to you. For a self-employed person, you are paid a fee on a per-job basis and you will have the right to negotiate with the payer the exact amount you would be paid for. However, as an employee, you are paid based on a regular wage. You may get overtime pay or bonus payment or even receive a commission payment in addition to your regular wage. As a self-employed person, you are financially liable if the obligations of the contract are not fulfilled. You have to pay your hired helpers and incur business expenses, such as rent, relating to the place of operation. You may also have to make capital investment in the business. On the other hand, as an employee, you are not financially liable for any losses of the employer's business resulting from any breach of obligations of the contract between your employer and its clients. As a self-employed person, you do not receive any protection or benefits from the payer and you have to provide your own medical and insurance coverage. As an employee, you are entitled to benefits that are normally only offered to employees. Some examples of these benefits are employer's contribution to CPF, medical and vacation leave, medical reimbursement, group accident and health insurance. Moving on, we will share with you the tax obligations of a self-employed person. As a self-employed person, you will need to report your income earned from the performance of your services or trading activities as business income in your personal income tax form. You may claim business expenses incurred against the business income, which are subject to deductibility rules. You will be assessed on the net business income, which is derived from your gross revenue less business expenses. The net business income is treated as a part of your total personal income. and you are taxed at progressive personal income tax rates if you are a tax resident of Singapore. A self-employed person needs to report his business income in a 2-line or 4-line statement in his personal income tax return form. There is an increase in revenue threshold of 2-line statement from $100,000 to $200,000 from year of assessment 2021 onwards. If you received revenue of $200,000 or less, you are required to report only the 2-line statement which comprises the items revenue and adjusted profit or loss. If your revenue exceeds $200,000, you are required to report a 4-line statement which comprises the items revenue, gross profit, allowable business expenses and adjusted profit or loss. If your revenue exceeds $500,000, you are required to report a 4-line statement and also submit a certified statement of accounts. Certified means signed by the sole proprietor or precedent partner of the business, indicating that the accounts are true and correct. Self-employed persons can claim expenses to deduct against their business revenue to reduce the amount of tax payable. We will now explore what are some of the business expenses that could be incurred in the course of running a business, and the deductibility of the expenses. Only allowable business expenses may be deducted against your income to reduce the amount of tax payable. What are the expenses which we can allow as deduction? The expenses must be related to your business. They must be incurred during the basis period in the production of income, and must be allowable according to the tax laws. Here are some examples of allowable business expenses. They include employees' remuneration, rental paid for business premises, and cost of traveling on public transport. What are the disallowable expenses? Expenses which are capital, personal and private in nature, or prohibited by the tax laws are disallowable expenses. Some examples of disallowable business expenses are salary paid to sole proprietor or partner, fines and repayment of loans. Please note that with effect from year of assessment 2019, private hire car drivers can claim car-related expenses against their driving income. We will move on to compulsory Medisave contributions and CPF relief next. Self-employed persons must make compulsory Medisave contributions, which may be claimed as tax relief to reduce the amount of tax payable. You'll need to make compulsory contributions to your Medisave account if you are a self-employed person, you are a Singapore citizen or permanent resident, and your annual net trade income is more than $6,000. A Notice of Computation (NOC) of CPF contributions will be issued to you. The NOC would state clearly how much Medisave you need to contribute. You may claim compulsory and voluntary Medisave contributions as tax reliefs to reduce the amount of tax payable. For YA2021, the relief will be capped at the lower of 37% of your net trade income assessed, or CPF relief cap of $37,740, or the actual amount contributed by you. You are not required to claim for this relief, as it will be automatically allowed based on information provided by CPF Board. Do note that no CPF relief will be allowed in respect of your contributions made in 2020, if you have no assessable net business income for year of assessment 2021. Please visit IRAS website for more information. Self-employed persons including sole proprietors and partners must file their annual tax return if they received a notification from IRAS to file. Please declare your self-employed income under the Part Trade, Business, Profession or Vocation of the Income Tax Form B. Self-employed persons need to declare their business income based on the accounting period of their business. The accounting period is usually a 12-month period of trade for which they calculate their profits or losses. Most businesses choose accounting period that ends on the 31st of December each year. You may choose an accounting period that ends on any date of the year. If your accounting year end is the 31st of March, for example for the accounting period from the 1st of April 2019 to the 31st of March 2020, please report your income in YA 2021. If your accounting year end is the 31st of December, for example for the accounting period the 1st of January 2021 to the 31st of December 2021, please report your income in YA 2022. You must file an income tax return if you receive a letter, form or an SMS from IRS informing you to file your taxes. Filing is required and it does not matter how much you earned in the previous year. If you did not receive the notification or income tax return from IRS, but you were in receipt of an annual income, including other taxable source of income, example employment income, a rent exceeded $22,000, or your annual net business income exceeded $6,000, you can request to file tax by activating your MyTax portal account at IRS website by the 1st of March, and e-file your tax return at MyTax portal from the 1st of March to the 18th of April. For tax reporting purposes, you will be required to set up a good record-keeping system in order to track your business income and expenses from the onset. Hence, let us take a closer look at the following. The benefits of keeping proper records. Ways to keep proper records. The types of records to keep. We will also share with you record-keeping videos to provide you with additional tips on record-keeping. There are many benefits in keeping proper records, some of which I like to share with you now. By having a good record-keeping system, you can be aware of the financial status of your business. It helps you make better business decisions at any point of time. These business records can be the source of evidence to detect whether there have been any business losses, or internal fraud and theft. With a proper record-keeping system, your income earned and business expenses incurred can be readily determined, thereby reducing the cost and effort for tax filing. You will also be able to produce records and documentary evidence to support your income declaration, if there are any queries from IRS. There are two ways to keep your records. You may keep them manually or electronically. The manual way is to record all the business transactions in a physical form. The electronic way is through the use of a computer and/or in accounting software. In line with statutory requirements, all source documents must be kept for a minimum of 5 years. It is highly recommended that you keep records electronically, as it has many advantages compared to the manual way. It is a quick, efficient, and accurate way to record the business transactions, including details such as customer particulars, payment details, and stocks. You will be able to get timely update of how your business is performing easily, so that you can plan ahead and forecast on your business needs. It is a convenient way to keep your invoices, which can be easily tracked and referred to, as and when needed. It provides the ease of generating summaries and reports for your revenue, purchases and expenses transactions such that you can extract the figures for tax and other business reporting obligations. Keeping electronic records requires lesser storage space than manual records. For your information, you do not need to seek approval from IRS to keep your records in an electronic format for tax purposes. However, it is important for you to ensure that proper internal controls are in place to maintain the integrity, completeness, accuracy, availability and reliability of the electronic records. As a self-employed person, you need to retain all the source documents, accounting records and schedules and any other supporting records relating to your business. Examples of source documents are receipts, invoices, bank statements, etc., as shown here. Accounting records and schedules refer to general ledger, debtors, and creditors ledger, profit and loss statement and balance sheet. Example of other supporting record relating to business is business contracts. When you receive fees or income from the sale of your goods or services, you need to issue serially printed receipts to your customers with a carbon copy retained. However, you need not do so if you record the income using an accounting software, and invoices are generated for all income transactions with a duplicate retained. Likewise, for payments of purchases and expenses, you should obtain the invoices or receipts and retain them. As a good practice, do make payments for such transactions through a bank account which is used solely for business purpose. In instances when a receipt is not issued, you may prepare a payment voucher with an acknowledgement from the recipient. The payment voucher should state the recipient's name, date of purchase, description of items bought, and the amount. Sometimes, you may pay for items of low value in cash for business purpose. Please note that cash receipts issued should also be retained although the amount is low. You could indicate the details of purchase or expense if such cash receipts do not contain the information. For assets used for the business, you are required to prepare a fixed asset schedule right from the start of your business, so as to record the assets purchased. Do remember to retain the documents such as contracts of purchase and invoices. Stocks refers to any items purchased for sale. You should carry out a physical stock count at the end of the accounting year, and keep a record of the count. You are also encouraged to maintain separate bank accounts for business and personal purpose. Keeping bank accounts solely for business use allows you to trace your business transactions easily. In the absence of separate bank accounts, personal and business transactions should be differentiable. You should retain all business-related bank statements. IRAS has further simplified record-keeping requirements for small businesses to make record-keeping easier for them. To find out whether you meet the qualifying conditions, please visit the web page stated here. Under simplified record-keeping, you only need to keep business records, such as registers and listings, and not source documents. IRAS has also uploaded several videos on record-keeping onto the YouTube. The QR codes and the URLs are available here. Next, we like to share with you the common reporting errors made by self-employed person, and how they can be avoided. Some self-employed persons report their income received incorrectly, under the employment or other income section of the tax return. The correct way is to declare the income under the trade, business, profession or vocation section of the tax return. It is incorrect to report net collection, after deducting the purchases and expenses from the total receipts, as your revenue in the tax return. Taxpayers should report the gross revenue earned. Expenses should be reported separately. Please note that expenses incurred to entertain friends, purchase of food for own consumption, and your medical fees are private in nature. They are not allowable for deduction against your business income. Only expenses incurred solely for business can be claimed as tax-deductible expenses. Some taxpayers claim expenses on petrol, maintenance and parking fees incurred from using their private cars. However, such expenses are not tax-deductible even if they are incurred for business purpose. Do not claim estimated or unsubstantiated expenses. All expenses claimed should be based on actual amounts incurred and supported by source documents. It is incorrect to claim excessive payments made to related parties, such as family members, who are hired to help in the business, that are not in line with the market rate. Some taxpayers may have the misconception that excessive payments can be claimed in view that there is an employment relationship and/or payments are indeed incurred for business. The correct amount to be claimed should commensurate with the actual services or duties performed, that is in line with the market rate. We observe that some taxpayers fail to keep and retain sufficient records to ascertain income and allowable business expenses. There is a misconception that the records and documents can be discarded once the tax bill is received. All business records and documents should be kept for a minimum of 5 years. For example, all business records for the year 2020 should be kept till the year 2025. IRS may request for them in the course of audits. As we have gone through a number of tax-related topics, let us now attempt a quiz on some case studies and test our understanding. Scenario 1.
I am an independent software developer based in Singapore and offer my services online. Most of my clients are from overseas and the income received is credited to my bank account in Singapore. Do I need to report such income received in Singapore since the buyers are mainly from overseas?
Let's take a few seconds to think of the correct answer. The answer is yes. Considering that the business is carried out from Singapore, all your online income is therefore sourced in Singapore and subjected to tax in Singapore. This is regardless whether your clients are from Singapore or overseas. Hence, you are required to report the income earned, and keep all the supporting documents in an orderly manner to facilitate your tax reporting. Scenario 2.
As a commission agent, I mainly use my car to meet my clients. Sometimes, I take taxis or private hire cars to meet them. Since I'm using both my car and public transport for business purpose, can I claim the total cost as traveling expense against my business income?
The correct answer is no. As usage of public transport is strongly encouraged in Singapore, cost incurred on using private car is not deductible as an expense, even though it is used for the purpose of business. On the other hand, the cost incurred on taking public transport for business purpose can be claimed as an expense. You are required to retain the receipts and keep track of the purpose and details of the trips. As taxi receipts are usually printed on thermal papers, do make an effort to photocopy, or take a photo and upload to an online folder. Scenario 3.
I spent $40 for a dinner with my client at a restaurant. I have kept the receipt and claimed the full amount as entertainment expenses. Is this correct?
The correct answer is no. The cost of the meal for your own consumption is considered as a private expense and hence not tax deductible. In this example, you can only claim $30 as your entertainment expense. As part of proper record keeping, you should record the details of all your entertainment expenses incurred for your business as shown in the red box. Scenario 4.
I have included my medical fees as part of my business expenses as I fell sick for a few days and could not work. Is this correct?
The correct answer is no. This is because only expenses incurred for the purpose of earning your business income are allowable for tax deduction. Expenses such as your medical fees are private and personal. Therefore, they are not tax deductible against your business income. Scenario 5.
I mainly use my credit cards for payments whenever I purchase stationeries for my business. I kept the monthly credit card statements as proof to claim for my business expenses. Is this sufficient?
The correct answer is no. You should also keep the source records, such as the original receipts to support your claims, in addition to the bank statements, as they provide more details on the expenses claimed, which are required under an IRS inquiry. Scenario 6.
I am a freelance artist. I am required to report my income and complete the Form B income tax return. Since I am not an employee nor do I own a business, I shall report my income under the Other Income section of the income tax return. Is this correct?
The correct answer is no. As a freelancer, you are considered as a self-employed person. Hence, the income you receive is a trade income to be reported under Trade, Business, Profession or Vocation section. Depending on the gross revenue amount, you need to report using either a 2-line or a 4-line statement. Scenario 7.
I am a renovation contractor. In the course of my business, I've to buy tools, materials and other miscellaneous items. In order to make revenue tracking easier and cut down in retaining receipts, can I just report the net revenue after deducting such costs incurred?
The correct answer is no. Assuming your total revenue is $200,000 or less, you should report the total gross receipts as the revenue amount under the 2-line statement. Other business-related expenses can be claimed as deductions to arrive at the adjusted profit of the 2-line statement. We have arrived at the last scenario.
After I completed the filing of my income tax return for the year, I can safely discard all the related documents and reuse the files for storing my new receipts and invoices. Is this correct?
The correct answer is no. You should not discard records and documents after filing your tax return or even after the tax bill is received. Under the law, you are required to retain these records and documents for at least 5 years. IRS may request for these documents in the course of an audit. Let us now take a look at the penalties that can be imposed. Taxpayers are responsible in fulfilling their tax obligations and for the information declared in their income tax returns. Please note that IRS takes a serious view of non-compliance. To determine accuracy during filing of tax returns, audits are carried out to detect and correct the errors. During our tax audits, you are required to make your business records available to IRS because the responsibility of substantiating the reported income and claims of expenses in your tax return falls on the taxpayer. If you fail to produce proper records or documentary evidence of your income and expenses, IRS may disallow your expenses claims and your tax payable may be adjusted upwards accordingly. You may also have to pay a penalty for not keeping proper records of these transactions or submitting an incorrect tax return. In fairness to the majority of people who meet their tax obligations, IRS undertakes strong actions against small group of errant taxpayers through detailed investigations to uncover tax evasion and fraud. There will be severe penalties for those who willfully evade tax, and IRS will not hesitate to bring offenders to court. Voluntary Disclosure Program. If you have made incorrect income declarations, you can come forward to correct them. Under IRS Voluntary Disclosure Program, IRS imposes reduced penalties for taxpayers who come forward with full disclosure of the mistakes voluntarily. If you wish to disclose omissions or errors made in your past income tax returns, you can email the details to IRS to the address shown in the slide. We encourage taxpayers who have made errors in their tax returns to come forward voluntarily to correct their errors. For more information, please visit IRS website as shown. We would like to also share with you some ways where you can seek tax assistance on self-employed matters. You may self-help at our IRS website or reach us via the channels stated here. For more information on self-employed persons, Please visit IRAS website and go to Home, Businesses, Self-Employed, Sole Proprietors, Partners. You may also use Ask Jamie, which is a 24-hour virtual assistant chatbot to get quick answers to your questions. Thank you.